In this video, I'll be breaking down my Zen Library script. This script is a library, which means it is basically a reusable script, a script that can be referenced by other scripts. Now, it behaves a little bit differently to indicators, but that is what it is most similar to. You can use most of the features of indicator scripts in libraries, but there are a few important differences which we'll go over in this lesson and in other lessons. So the Zen Library is just a collection of custom tools and utility functions commonly used with my scripts. So I wrote this library to assist in my own scripts. So all of the functions you see here are just functions that I commonly use across multiple scripts. And so I can keep all of this code in one place, reference it in my other scripts, and if I need to make an adjustment to anything, if there's a bug with one of these functions, or I need to add a feature to one of the functions, I can do so in one place, and that will work across all of my scripts. So let's get started with the utility functions. So here are just a handful of simple, basic utility functions. And now this script is heavily commented because when you publish library scripts, all of this information here gets converted into your script description so that other traders, when they scroll through the script library, they'll see exactly what your script does. I'll show you that really quickly. So here is my publicly published library script. And if you scroll down a bit, you can see all of the information, all of those comments in the script get converted into the script description here. And so anyone who comes across this library in the TradingView public script library will see exactly what my script does. So they can just read through the documentation here and understand what each function does without needing to read through the code to work that out. So let's go over some of these utility functions. The first one we have here is get decimals. Now notice that you need to use the export keyword or prefix to declare functions that will be available from other scripts importing the library. So you can have a function in here, like my function. Whoops, that was not even close to correct. And this function could return X. And I could call this function in my script. So I could call my function down here. And now if I save the script, we'll get an error because this X doesn't do anything. Let's just say X equals 1 and save the script. And that compiles just fine. Now, the main difference here is that we cannot reference my function in a different script. So if I throw on a new blank indicator here and I go to my library link, copy that, go back to my blank script and paste that at the top here. Now I can import this with an alias. So let's say as Zen. So now I can reference the library by saying zen.control space, and that will give me all of the functions in my library. Now, if I were to publish this script, this function exists within the local scope of our library. No other script could reference this function because it is not exported. So in order to reference functions within this library, we need to use the export keyword to make sure that PineScript knows that this function needs to be exported and able to be referenced by other scripts. Now, the reason we do this is because there are certain rules with exportable functions that we need to respect. For example, we cannot use the security function with libraries. Now, if you want to read about all of the nuances and limitations of libraries, come to the user manual, PineScript version 5 user manual. There'll be a link in the video description. They explain exactly how functions work. I'll be recording a lesson on libraries in detail in the mastery course, but the main important things to note is this section here. We cannot use request, so we can't reference a security function or anything else that falls under the request library. We cannot get user inputs. We cannot plot, fill, or use background color calls. I'm not sure why, but that's just the rules for library scripts. But anyway, that's outside the scope of today's lesson. Let's just break down the functions that do exist in my library script. So I already mentioned get decimals. Get decimals gets the decimal places after the quote price on your chart. So in this case, I'm on Bitcoin and there are 2 decimal places after the quote price. So using this function would return 2. This is useful for things like truncating a number down to the same number of decimal places on your chart. So some scripts, maybe you're sending a webhook alert to a third-party API, and you send an indicator value or a stop-loss price or something like that, and the price might look like something like 5 point and then like 7 or 8 decimal places after the number. And maybe you only want to send the same number of decimal places as the market you're on. That is what this is useful for, and this function, the truncate function. The get decimals can be used with the truncate function to cut the excess decimal places off numbers in your script. Then we have the to-whole function, which just converts pips into whole numbers. So if you've got, for example, if we're on euro-yen and we want to calculate a 50 pip stop loss, 0.52 would be converted into 52 as a whole number. And then we have our 2 pips function, which just converts whole numbers back into pips. Next, we have our AutoView get position size function. So this calculates our Oanda Forex position size for AutoView based on the given parameters in the function arguments. So we have balance, risk, stop points, and conversion rate. So if you pass in your account balance, your risk per trade is a percentage, your stop loss size in points, not pips. So if your stop loss size is 10 pips, then you would put 100 points into this argument. And then we have our conversion rate, which is the conversion rate of your account balance currency against whatever you're trading or whatever you've set your alerts on. And this function will return your position size. I put it in this library because I try to automate all of my scripts that detect profitable signals. And this just makes it a little bit easier to do that without having to copy this code into every script that I write. Now, moving on, we have our technical analysis functions. So these just get various values relating to technical analysis. So the first one is get MA. This gets a moving average based on the given type. So you could pass in EMA, SMA, HMA, a weighted moving average WMA, VWMA, VWAP, or a DEMA. That's what this last one returns. So in my scripts, I usually, let me throw on the ultimate pullback indicator really quickly and open up the source code. If I come up to our moving average settings, I usually have my MA type as a user input, and then we have our list of potential options here. And then I can call this library get MA function to return a moving average based on that setting. I use moving averages in a lot of my scripts, and so it's helpful or handy to be able to get those moving averages using this library really easily without having to have all of this code in my script. Next up, we have get EAP. This returns a stop loss size based on the EAP stop loss sort of algorithm or formula that Stephen Hart from the Trading Channel uses in his strategies. Basically, this is just a way to round down your stop on certain brackets so that you can have a slightly tighter stop on average and therefore a slightly larger position size on average, leading to slightly improved profitability on most markets at least, or most strategies, while not affecting your stop out rate too much or your loss rate too much. So first of all, you pass in your current ATR, then the script converts that number into a whole number using the to-whole function from up here. So it's referencing its own library function here. And then we declare our EAP stop whole number variable. And then all of these if statements just check if the ATR falls between 20 pips and 30 pips, then it sets our EAP stop loss to 20 pips. So if we had a 29 pip stop loss, this function would return 20, and our stop loss would be 20 pips above the high instead of 29 pips, and so on. Between 30 and 50, it gets rounded down to 30. Between 50 and 100, it gets rounded down to 50, and anything over 100 gets capped at 100 pips. So that's what this function does. Now, I use this in my scripts a lot, but if you're not a student of Stephen Hart and you're not familiar with the EAP stop loss sort of algorithm and why he uses it, maybe don't use this in your own scripts unless you understand the concept here. So moving on, we have our bars above moving average. So this simply counts how many candles are above the given moving average. So we give a look back and a moving average, and this little for loop will just count how many bars closed above this moving average over that look back period and then return that number. Same with bars below MA, does the same thing just for bars below it. Bars crossed MA does the same thing as these two functions, except that it checks how many times price action crossed the moving average. So for example, over this period here, we had 1, 2, 3, 4 crosses over this period of price action here. And so this function, if I gave it, let's say, a 10 bar look back, it would return how many times price action crossed above and below the moving average over that look back period. This is useful for detecting potential periods of consolidation. If price action has crossed the moving average too many times over your look back period, then price is consolidating, going sideways. And then moving on, we have our get pullback bar count. So this counts how many green and red bars have printed recently, i.e. our pullback bar count. And by green and red, I mean based on whatever direction you pass in. So if you pass in 1, then this function will count how many green bars printed over our look back period. If you pass in -1, it will count how many bearish or red bars printed over our look back period. So this is useful for counting how many bars we've had pulled back against a certain direction. So if we set our look back period to, let's say, 10 bars, you can see that we've had 1, 2, 3, 4, 5 green bars over this period of price action. And we do this just using a simple for loop that just loops our look back, and it just checks if the closing price of that bar over our little historical look back for loop closed above or below its open. Very simple function here. I use this in the ultimate pullback indicator to count how many bars have pulled back since a new low, because the rules of the pullback strategy require at least 2 green bars since price makes a new low. And so I can use this function to verify that we have had a pullback. Now moving on, we have a bunch of candle functions here. This one gets the body size. This one gets the top wick size. So that's in pips how big the wick was on top of the bar. So all of these are in pips. Get body size returns the current body size in points, not pips, returns it in points. You need to divide it by 10 to get pips on the Forex market. So we have get body size, we have get top wick size, we have get bottom wick size, and get body percent. So get body percent will return the candle body size as a percentage of the entire candle size. So all of these functions I use for detecting certain candlestick patterns, for example, shooting star and hammer candles, doji candles, that sort of thing. So for a doji candle, I'd want to compare the top wick to the bottom wick to make sure they're of a similar size. And then I'd want to compare the body percentage to the total size of the candle. And if the body percentage of this candle is below a certain number, usually I go with 5%. So if this candle body is 5% or less of the entire candle size, and both top and bottom wick are a similar size to each other, then it's likely that we have a doji candle. So that's what I use these for. Moving on, we then have our candle setup detection code. So here we have our hammer detection. So this function takes a couple of parameters here. It takes the fib level and color match. So color match simply means, does the hammer need to be bullish, green? By default, this is turned off. So if you don't pass anything into this parameter, then color match will be turned off, and so a hammer could be red. So an example of a red hammer would be this bar here. It meets the criteria of a hammer candle, but it closed bearish. It closed lower than it opened. But it's still a sign of buying pressure. Same with the shooting star. If color match is turned off, which it is by default, then this bar here would be considered a valid shooting star because it is still a sign of selling pressure due to the large wick and the tiny body, which is below our fib level. So if I open this up, the default fib level is 382. So what that means is the script is getting the Fibonacci level of this bar and checking the 382 retracement. So that's this red line here. If the bar's body is contained below this number, so it opened below this red line and it closed below this red line, then we have a valid shooting star candle. And same for hammer candles. The candle must close above the 382 retracement. So this would be an example of an invalid hammer candle because the bar opened below our 382 and closed above it. We need both the open and the close to be above this number, or this ratio, this percentage of the candle size, total size, in order to be considered a valid hammer candle. So that's what our hammer function does. It just calculates our bull fib, which is the 382 percentage mark of the total candle size. Then we check if the candle opened and closed above that level. And then we check our color filter. So if color match is false, which it is by default, then this check will be ignored. Otherwise, it will just check if the candle closed greater than it opened. And then it's the same thing for our shooting star candles. Exactly the same code, except that we're checking our highest body closed above our fib level in order to be considered a valid shooting star. Moving on to the next candle, which is a doji candle pattern, which I just explained when we were going over the get top wick size, get bottom wick size, and get body percentage. I use all of those functions here to check the criteria of a doji candle. So the first thing we do is make sure that the top and bottom wick size is within 2 times the size of the other wick. So if we had a candle that looked like this, first of all, you'd be asking yourself why you're using children's drawings to analyze price. But if it did look like this, this would not be a valid doji because the bottom wick is not within 2 times the size of the top wick. The top wick is much larger than the bottom wick. So this is more like a shooting star candle than a doji candle. For doji candles, we want this to be a sign of indecision. So we want the candle to look more like this. We want the body to be in the middle of the total candle size, and the bottom wick and the top wick to be of a similar size. This is a sign of stalling momentum or indecision in the market, which can be a valuable entry pattern or an accurate entry pattern under certain market conditions, especially if it's a swing high or swing low. So this can make a great pullback entry pattern and a great counter trend pattern after price has exhausted itself. So that's why I include that in my library. I use this entry pattern in some of my scripts. And that's what this code does. It just checks those rules. So we check the wick sizes, and then we check our body percent. Is our candle body percent less than or equal to the given body size? So by default, the body size is set to 0.05. So you can call this function in your script without giving it any parameters, and it will just use the default, which is what I use in my scripts. So a default wick size of 2.0 and a default body size of 5%. And that will return our doji candlestick patterns. This will return true if the current bar meets the rules of a doji. Then next up, we have our bullish and bearish engulfing candle patterns. So for these patterns, we have a bunch of inputs to give the function. The first is allowance, point allowance. So let me go to a market where I can demonstrate this issue. And here is the example in question. This candle here is a valid engulfing candle according to my discretionary rules. I would count this as an engulfing candle. The problem is that the candle does not quite open below the previous candle's close. If you zoom right in, you can see that it's 1 point off opening below or equal to the previous candle's close. So I included a parameter in this engulfing candle function called point allowance. By default, it's disabled, it's set to 0, but you can override this default by giving this value in the when you call this function. So for example, in the ultimate pullback indicator, there is a setting down here under miscellaneous, I believe. Yes, point allowance. If I set this to 1 and click OK, now this candlestick pattern is being detected as a valid bullish engulfing candle because the point allowance is allowing for 1 point to be off. So that is the purpose of point allowance, this allowance parameter. Then we have rejection wick size. This is just the rejection wick of the candle to the upside. So let me find an engulfing candle. Here's one. Here's a good example. You can see that this candle here has a large rejection wick to the downside. A bearish engulfing candle should be a sign that price momentum is shifting to the downside. But if we have buying pressure here on the same candle that pushes price back up, even though this engulfs the previous candle and is a swing high, it could be argued that this is a lower quality entry pattern because of the buying pressure we see here. What we really want to see is a very small wick to the top, or no wick at all, like on this bar here, which was a more reliable indication that price was becoming bullish. Now, on most markets and time frames, this check is not necessary, or this filter is not necessary, because it doesn't really affect the win rate too much. But I did find that on some markets and time frames, having a rejection wick too large to the downside, like 2 times a body or greater, is definitely not a good entry pattern. And so I included an option here to set the maximum rejection wick size. Now, this is the maximum rejection wick size compared to the body as a percentage. So if you set this to 1, that would mean that a rejection wick size of 100% of the candle body would be ignored. So let me show you that in practice. If I come down to my candle settings here, max rejection wick size is our rejection wick setting. If I set that to 1, this setup will go away. There we go. It's gone now because this rejection wick is greater than 1 times the size of the body. And then finally, we have engulf wick as a parameter. So this just means the bar must engulf the previous candle's wick. By default, it's turned off in this function, but you can override this if you want to. Again, that does affect the accuracy of this pattern on some markets. Some markets perform better if you make the bar engulf the wick. So that's this setting here. If I turn that on and turn this off, you can see that our win rate has improved by a few percent just by making sure that the candle engulfs the previous candle's wick. And that's it for our bullish and bearish engulfing candles. Apart from that, we just check the simple candlestick pattern. Does the candle engulf the previous candle? And then we check our filters. And obviously the same for bearish, just in the opposite direction. And so that's it for our candlestick patterns. For now, at least. I'll probably add to these in the future, but for now, these are the candlestick patterns that this script detects. Moving on, we now have our filter functions. So we have a time filter here. This just returns true if the current bar falls inside the specified session. So this is used in a lot of my indicators to tell the script not to take setups during certain times of day. And so I can use this time filter in this library across all of my scripts. Same with the date filter. This just checks if the current bar's time falls within these 2 dates. And then we have day filter. This returns true if the current bar's day is equal to the given parameters. So if you pass in true for Monday and the current bar's day of week is equal to Monday, then this day filter will return true. So this filter checks if the current bar's day is in the list of given days to analyze. And then based on whichever day Boolean you pass in, true or false, will tell the script, should the script analyze this day. So some scripts do not perform well on Mondays for me, some strategies, and so I like to include a day filter in my scripts. And having this as a library function is really cool because it just means I don't have to have all of this code, this big block of code in all of my scripts. I can just reference the library. So moving on, we have our ATR filter. So this function checks the current bar size against the given ATR and the max size that you've specified. So you can either pass in a custom ATR value. So for example, maybe you want to check a 7-period RSI. With your filter, you can pass that in as your ATR. Otherwise, if you don't pass in anything, the ATR will be set to 1111 by default. And then over here, the script checks if ATR is 1111, that means the user hasn't overwritten this ATR value. And so we just reference a standard 14-period ATR. Otherwise, we use the given ATR to analyze the maximum size. So the reason I did this, I use this default value, is so that you can simply call ATR filter and then pass in a max size. So for example, ATR 3.0 will return true if the current bar size is less than 3 times the 14 period ATR. This is a useful filter for ignoring giant setup candles. So sometimes the script will detect a setup candle that is just too big to trade. For example, this bearish bar here or this bearish bar here. If these were valid entry patterns, you wouldn't want to trade them because your stop loss and take profit are going to be massive compared to recent price action at least. And so that's what I use the ATR filter for. And so this function just checks if the current bar's total size, so the high minus the low, is less than or equal to the ATR value multiplied by our max size parameter. And that's it for our filters. Now the final section in this script is our display functions. I only have one function here at the moment, and that is the fill cell function, which just updates the given table cell with the given values. So we pass in a table ID, we pass in the column and the row, and then we can pass in a title, a value, a background color, and a text color. So you can see up here, I have a table drawing onto the chart. This script, the UPI script, uses this custom function to update this table with the values you see there. And so I put this function in the library because I like to display information on using tables in my scripts. And so having this custom function here in the library just means less code that I need to put into all of my scripts. Anyway, that is it for the Zen Library script. I will be adding features and functionalities to the script in the future. And so I will keep updating this section of the course as I add to this script. But for now, this is the first version of the Zen Library, or technically the second version because I did have to fix a bug with the time session filter. This function here was doing the opposite. It was determining if the current bar falls outside the specified session, so I needed to fix that bug. But technically, this is the second version of the Zen Library, but this is the first lesson I'm recording on the script, and so any future updates, any future versions, I will record separate lessons on what I add to this script. So I hope you found that interesting. Feel free to use this library in your own scripts, or steal the code and do whatever you want with it. And that's it. I'll wrap this lesson up here, and I will speak with you in the next lesson. Take care, and good luck with your trading.